Hello everyone, this video is brought to you by the 7th Monk. This is lecture 2 of unit 4, the government budget. In the last lecture we did the meaning, objectives and components of government budget in detail, and over here we will be doing the classification of receipts and the classification of expenditure in detail. So this is the part that we will be completing in this lecture. So in the last lecture, I told you that budget has got two components, budget receipt and budget expenditure. Budget receipt is of two types, revenue receipt and capital receipt, and budget expenditure is also of two types, revenue expenditure and capital expenditure. So first we will do budget receipt and its components in detail, and then we will come to budget expenditure and we will do its two components in detail. So let's start with budget receipt. Budget receipt is the estimated money receipts of the government from all sources during a financial year. So whatever the government is earning from various sources during the period of 1st of April till 31st of March is a part of budget receipt. You all know that we earn income either by doing some work or by taking loan or by selling out our property. These are the three sources from where we get money. Similarly, government also gets money from these three sources, either by doing some work or by selling out something or by taking loan. Okay, so we will start first with revenue receipt and capital receipt, then you will understand how these three things are really important for understanding both of these. So revenue receipt are those receipts of the government which neither creates any liability nor reduces the assets of the government. Okay. So neither creates liability means there is no repayment burden. It means the government is getting this money without taking any loan. And nor reduces assets means government is not selling out its property for getting this money. Okay. So it is neither creating any liability and nor reducing any assets. It means the two sources of getting money are gone, that is loan and selling out property. So what is left? Work. Okay. So revenue receipt is including the money that government is getting for the work that it is doing. Alright, that's why it is neither creating any liability and nor reducing assets. Government provides us several services, like it provides us protection from external aggression by providing defense services, right? Then there are various administrative services. Government provides us some commercial services as well, right, from its public sector enterprises. Then various other services like license and many other things are also provided to us by the government, and for most of these things we are paying some tax. For providing defense services, for providing administrative services, we are paying tax to the government. All right, so that tax forms a major part of revenue receipt. Hence revenue receipt has two components, tax revenue and non-tax revenue. Okay, so we will study both these things in detail. There are several government schools where we don't pay fees, okay, which are free of cost. Even government is giving something to the students like books, midday meal, clothes, school uniform, etc. All right, so from where the money is coming in the hand of government to spend on all these welfare activities? It is by the means of tax. By taxing the people who are earning, the government is providing services to those people also who don't have the money to buy something for themselves. All right, so tax revenue is the revenue that we pay to the government for various services that the government is giving us. And even in non-tax revenue, we pay to the government a part of our income for various services that it is providing. Here the services in non-tax revenue that the government is providing are sort of direct, because we want license, so we are paying license fees. Okay, we have done something wrong, we are paying fines. So it is a sort of direct fees that we are paying to the government, direct money. But tax revenue is quite indirect, because some other person is paying this money and some other people are getting its benefit. Okay, sometimes we ourselves get its benefit, but the rate of benefits depends. But since tax revenue and non-tax revenue neither creates any liability and nor reduces the assets of the government, hence they are the part of revenue receipt. So let's start with tax revenue. So tax is a compulsory payment imposed on the person or companies by the government to meet the expenditure incurred for various welfare activities of the community as a whole. It is of two kinds, direct tax and indirect tax. Direct tax are those tax whose burden cannot be shifted onto others. These are generally progressive in nature, that is, the rate of tax increases with increase in income. And the example of such taxes are personal income tax, wealth tax, cooperative tax, that is, income tax on the company's income, right? And estate duty, gift tax, etc. Indirect tax are those tax whose burden can be shifted onto others. These are regressive in nature, that is, the rate of tax decreases as income increases. And the example of indirect tax are entertainment tax, passenger tax, and now you have the one and only GST. All right. So I hope that the difference between direct and indirect tax are clear to you. These are generally asked in the examination. So remember that both direct and indirect tax are part of revenue receipt because they are neither creating any liability. Okay, there is no repayment burden, and they are neither reducing the assets of the government. Government is not selling out its property for getting this kind of receipt. It is for the work that the government is doing, the welfare activities that the government is doing. For that we are paying this tax revenue. Okay, and then we have three kinds of tax: progressive, regressive, and proportional tax. So if your x-axis is representing the level of your income, and the y-axis is representing the level of tax, then as income increases, your tax is also increasing. As income increases, your tax is also increasing in case of progressive tax. Then in case of regressive tax, as income increases, your tax decreases. As income increases, your tax decreases. All right. And in case of proportional tax, irrespective of the level of income, same amount of tax is imposed on all the persons. So if the tax is 5%, then if whether you are earning 10 lakh per year or you're earning 10 crore per year, the tax will be same, that is 5%. Okay, so that is proportional tax. Okay, but in case of progressive tax, if you're earning 10 lakh, it will be somewhat lower than if you're earning 10 crore. Okay, and in case of regressive tax, the condition is just opposite as that was in progressive tax. All right, so I hope this is clear to you. Then we have specific tax. When a tax is levied on the commodity on the basis of its unit, size, or weight, example tax on sugar, cloth, etc., then that is specific tax. Specific tax is a fixed amount of tax placed on a particular good. It is also referred as per unit tax and it depends on the quantity sold, not price. Example, tax on per liter of petrol. It does not vary with the cost of good. Okay, so per kg of sugar, per liter of petrol, etc. is an example of specific tax. After that, we have ad valorem tax. These are taxes which are levied entirely on the basis of money value of the good. For example, import and export duties. These are very high, up to 100% even. Okay, so if you are bringing something from other nation or if you are exporting something to other nation, then some import and export duties will be imposed on that good, and that will be called ad valorem tax. Okay, and then coming to non-tax revenue, we have commercial revenue, administrative revenue, and gifts and grants. These are quite personalized. Why I'm saying quite personalized? Because if you are boarding a train, then you are paying money to the government. Over here, government is directly providing you some services, right? In case of tax revenue, you are paying tax, but you are not sure whether you will get the services from the government equivalent to that amount or not. But over non-tax revenue, you are sure that you will get the services equivalent to that amount only. Okay, so commercial revenue are received by the government from public enterprises in the form of price. Public enterprises are those undertakings which are owned, operated, and managed by the state, and the revenue received from railways, post and telegraph, oil and gas supply, water supply, civil aviation, etc. are all part of commercial revenue. The public enterprises sell product and services to the people and collect revenue in the form of price, interest, or dividend on government investment supplies. All right. So here is the public and this is the government. So government is giving some services to the public. In return of that, public is providing some money to the government, and that money is commercial revenue. For example, if we take a train, okay, then that money goes into the pocket of the government. Okay, so similarly, if you use Indian Post, then the money that you will be paying over there for post will go to the government's pocket in the form of commercial revenue. Okay, here service is provided by the government, and in return of that you are providing money to the government. Now coming to administrative revenue, these are for various administrative services that the government is providing us. So administrative revenue are those receipts which arises because of administrative functions of the government. For example, receipt from fees, license, special assessment, fines for features as cheats are included under administrative revenue. Fees is a payment to the government for services that it renders to people. Example, passport fees, court fees, land registration fees, etc. Similarly, fines are those payments which are made by lawbreakers to the government. In simple words, it is punishment or penalty for violation of laws. We also pay license fee, which is a payment made to government to seek permission for something. For example, license fees paid to get license to drive automobiles, and then permission for keeping gun, etc. As cheat, the properties or estate of a person claimed by a state who die without legal heir or without making a will are known as cheat. So if no one is there as your successor, then government will take all your properties. Here, neither the assets of government are reduced nor any liability is created. So it is a part of your budget receipt, okay, and that too revenue receipt. Then we have special assessment. It is that payment which is made by the owners of those properties whose value has appreciated due to developmental activities of the government. For example, this was your property, okay, and the rate of this property were very low because the road was not there. So if the government will build a road near to this property, then the value of your land will appreciate, the value of your property will appreciate. Okay, so the government may recover a part of this developmental expenditure from you, okay, and the whatever you will be paying to the government, that will be the part of special assessment. Okay, and then we have gifts and grants. These two are the part of your budget revenue receipt. Okay, these are received by the government, okay, from within or abroad. This is not a permanent source of revenue. This is generally received during natural calamities like flood, earthquake, and maybe during war situations. Okay, so for fighting with corona, we all are contributing to PM Cares Fund, right? So that is a sort of internal donation that we are making to help out our country. Then our country also help various other countries, and various other countries also help our own country, right? Why we help each other? In order to improve our bilateral relations, okay, so that the international relations with other countries can be good. That's why these gifts, donation and grants are made. Okay, similarly the central government is also giving some grants to the state government to fight with the situation of pandemic, earthquake and other natural calamities. Okay, and then we have capital receipt. So revenue receipt is done. Now what is this capital receipt? Capital receipts are those receipts of the government which either creates liability or reduces assets of the government. Okay, the first one, that was revenue receipt, was neither creating any liability and it was nor reducing any assets. But capital receipts is creating a liability or it is reducing assets. It means the government is receiving money in capital receipt by either selling its property, right? That's why your assets will be reduced, okay, or by taking loan. That's why there will be some liability. Now this capital receipt is in the form of borrowing and other facilities. Borrowing creates liability because we have to repay it in the future, all right, and loan, that is borrowing, is taken, this loan is taken from various sources, from international sources as well as from internal sources. So the loans are raised by the government from its own country, by general public, by RBI, by sale of its treasury, and by international sources like International Monetary Fund, World Bank, Asian Bank of Development as well. Then recovery of loan causes reduction in the assets of the government, because earlier the government was getting interest over it, but now since loan has been recovered, then there will be no more interest on that loan that the government has provided to other nations or other states. Now, other receipts in the form of disinvestment. Now, what is this disinvestment? When the government sells its undertaking, okay, to other parties, then it gets some money in return of that. So that money is in the form of disinvestment. Then small savings that we make in post office, in provident fund, etc., also goes to the government, and the government has to repay it. So over here you can see that all these are either creating a liability or are reducing the assets. Disinvestment is reducing the assets of the government, and similarly recovery of loan is also reducing assets, and others are creating liability, a repayment burden on the government. Okay, so revenue receipt and capital receipt are just opposite of each other. Revenue receipt is the income that the government is earning by doing some work, by providing some services, and capital receipt is the money that the government is getting by loans or by selling its property. All right. Now coming to budget expenditure. So planned or estimated expenditure of the government in a financial year on developmental and non-developmental programs, or on its planned or non-planned programs, is called budget expenditure. Okay, so what are developmental expenditure? First of all, I'll explain it to you. Okay, I told you developmental and non-developmental and planned and non-planned programs. So what they are? See, developmental expenditures are incurred on economic and social development of the country. For example, for social development, some hospitals, some educational institutions are created. For economic services, some industries are made. So these are developmental expenditures. It is related to growth and development project of the country. Okay, economic services like agriculture, industries, transport, mines, communication, and social services like health, education, housing, civic amenities, and medical facilities are provided in the form of developmental expenditure. And non-developmental expenditure means those expenditure which are incurred on general services of the government, which do not usually promote economic development. It relates to non-developmental activities of the government. For example, defense. Defense is important, but it is not necessary for development, right? It is necessary in order to protect our country from external aggression, but directly it is not doing any sort of development. Okay, then for maintaining law and order, government needs to do expenditure. It is also not doing any sort of development, but it is just maintaining the stability in the country. Then for administration, for tax collection, interest payment on public debt, and then granting subsidies on food, external affairs, etc., are all part of non-developmental expenditure. Then what are planned expenditure? Planned expenditure means those expenditure that are incurred during the year in accordance with the central plan of the country. Earlier, 5-year plan were made, but now Niti Aayog make yearly plans. Okay, and as per those plan, if we use the money for expenditure, then that is a part of planned expenditures. Okay, it represents the current development of the country. Example, expenditure on irrigation, flood control, rural development, transport, energy, etc., are all part of planned development. The non-planned development are those which are incurred on financing those projects which are not planned in the central plan. Example, expenditure as a relief to the earthquake, because we do not plan an earthquake, right? That is a natural calamity and can come anytime, and for managing those calamities the government needs to do some sort of expenditure. Okay, and then expenditure on construction of houses demolished due to floods, etc., are part of non-planned programs. So all the money that is spent on these developmental, non-developmental, planned and non-planned programs is part of budget expenditure. All right, now let's discuss the two components of budget expenditure, that is revenue expenditure and capital expenditure. Basically, revenue expenditure are those expenditures which neither create any asset nor causes reduction in liability. Neither creates any assets means, see, when we do expenditure, we either buy something, okay, buy some assets, all right, and when we do expenditure, what we do, we either give someone loan, okay, and or we repay our loan, or we buy something for us. Similarly, government also do these things. So revenue expenditure are those expenditure which neither creates assets. Neither creates assets means government is not buying any property by it. So government is doing this for normal functioning, okay, for non-developmental expenditures the government is using this money. And then it is also not reducing any liability of the government, okay. So the government is not repaying its loan by using this money, so it means it is for the normal functioning, okay. We use some money, we use some part of our income for expenditure for the normal functioning of our house, for buying some basic necessities like food, clothing, shelter. Similarly, the government is also using revenue expenditure for basic necessities, okay, for normal functioning of the government, okay, and its department, and for provisions of various services like interest charged on debt. So that is not reducing any liability, and it is neither creating any assets. Similarly, grants given to state government and other parties, and it is reoccurring type, it happens regularly. As in our home we regularly eat food, so we regularly do expenditure on it. Similarly, for functioning of the government, revenue expenditure is done regularly. It is reoccurring type, that's why, okay, it is incurred regularly. And it is also called non-developmental expenditure because it is for non-developmental works. Now coming to capital expenditure, these are those expenditure which either creates assets or reduces liability. So, for example, creates assets means that the government is buying something, some more land, some more machinery, some more investment, etc. And reduces liability means that the government is repaying the loan. Okay, so that is what your capital expenditure includes. So this is non-reoccurring type because generally the government makes some big projects once in a while, okay, and then these are developmental expenditure because from these the government earns some money, okay, by buying some assets, all right, because it is creating some assets, the government earns more money because the government is doing some sort of investment by creating assets for it, and it is also reducing liability, that is the burden on the government. I hope all these things are clear to you. What is budget, that we discussed in the last lecture. What is budget receipt? Okay, what government is getting is budget receipt in a financial year, revenue receipt, okay, and what are these, okay, what are its components? Capital receipt, then budget expenditure, revenue expenditure, and capital expenditure, all are clear to you. So what were your revenue receipts? These were those receipts, which were neither creating any liability nor reducing any assets. Capital receipts were either creating liability or were reducing assets. Similarly, when we discussed budget expenditure, I told you that revenue expenditure neither creates assets nor reduces liability, and then your capital expenditure either creates assets or reduces liability. So remember it very well because such questions are asked a lot many times in the examination, sometimes in the form of identifying and sometimes in the form of difference. It can come in any form, so be prepared for each and every shot that CBSE throws before you. All right, so all the best. That's all for this video. Prepare well, and if you have any query, please comment down below. Please like, share and subscribe. Thanks for watching.